Assalamualaikum and good day. My name is AZRIN AFIQAH binti HARMAN, and today I will be presenting my article review titled Dividend Policy in Malaysia. In this presentation, I will discuss and compare two empirical studies that examine the determinants of dividend policy among Malaysian public listed companies, with particular attention to the period before and after the implementation of the Malaysia Code on Corporate Governance 2012. So, dividend policy as a key corporate finance decision. Dividend policy is one of the most important decisions made by the companies because it determines how profits are distributed between shareholders and retained earnings. Importance to shareholders and firm. For investors, dividend payments often act as a signal of the firm's financial performance and stability. At the same time, dividend decisions also affect on companies' ability to reinvest in future projects and support long-term growth. The relevance in the Malaysia context, in Malaysia, dividend policy is particularly important due to the country developing capital market and increasing emphasis on corporate governance. Rule of MCCG 2012, the introduction of Malaysian Code on Corporate Governance or MCCG in 2012 marked a major shift in how companies are governed, which has also influenced corporate financial decisions, including dividend policy. So there are two articles selected. The first one is Determinants of Dividend Policy, Evident from Malaysian Public Listed Companies, and the second one is Dividend Policy in Malaysia, a comparison of determinants pre and post MCCG 2012. So the first article review, I selected two empirical studies that focus on dividend policy in Malaysian context. Both study examine dividend policy but from different perspective. So for the first article by Anwar etc. 2023, focus on firm-specific financial determinants or dividend policy. This study examines how factors such as profitability, firm size, leverage and liquidity influence dividend payout decisions among Malaysian public listed companies. So what is interesting about this article is that it highlights profitability and firm size as main drivers or dividend payments, while leverage and liquidity are found to be less significant. This suggests that Malaysian firms rely more on earning performance rather than short-term financial constraint when deciding on dividend payout. So the second article by Bakri etc. in 2021 examined dividend policy from a governance perspective. It compares dividend determinants before and after the implementation of MCCG 2012 to assess whether governance reform change dividend behaviour. So for overall, these two articles were selected because together they provide a more comprehensive understanding of dividend policy in Malaysia, covering both financial and governance related aspects. For the research objective, identify determinants of dividend policy in Malaysia. Each of the selected articles has its own research objective, but both aim to improve our understanding on dividend policy in Malaysia. The first articles aim to identify the key firm-specific financial factors that influence dividend policy, particularly focusing on profitability, firm size, leverage and liquidity. The objective is to understand whether dividend decisions are driven more by financial performance or by financial constraint. Analyze the impact of MCCG 2012. The second article focuses on examining how dividend policy determinants change following the implementation of MCCG 2012. By comparing dividend behaviour before and after the governance reform, the author aims to assess the role of corporate governance in shaping dividend decision. Compare pre and post governance reforms. So together, this objective allow for a broader and more balanced evaluation of dividend policy in Malaysia. For the methodology overview, both articles adopt an quantitative research approach, but they differ in their methodological focus. The first articles use firm-level data from 83 Malaysian public listed company between 2013 and 2017 and applies multiple regression analysis to examine the relationship between dividend payout and firm-specific financial factors. For the second articles, it uses panel data and compares dividend determinants across two different periods before and after MCCG 2012. This approach allows the author to capture changes in dividend behavior over time and assess the impact of governance reform more effectively. The key determinants of dividend policy are profitability, firm size, corporate governance, and market risk and investment opportunities. Based on both studies, several key determinants of dividend policy can be identified. Profitability is the most consistent determinant, as a firm with stronger earnings are better positioned to pay dividends. Firm size is also important, as a larger firm tend to have more stable cash flow. After MCCG 2012, corporate governance related factors such as market risk and investment opportunities became more relevant, indicating a shift towards more strategic and long-term dividend decision making. Key finding in the first article, profitability to significant positive effect. The findings from the first article shows that profitability has a significant positive effect on dividends payout. Firms with higher earnings are more likely to distribute dividends. Firm size is also to be significant, suggesting that larger firms tend to maintain more stable dividend policy. Interestingly, leverage and liquidity are significant, which implies that dividend decisions are not heavily influenced by debt level or short-term cash constraint. The key finding in second article, pre-MCCG profitability, firm size, debt significant. The second article provides a dynamic comparison of dividend determinants before and after MCCG 2012. So before MCCG, dividends payout were mainly influenced by profitability, firm size and debt levels. However, after the implementation of MCCG 2012, that became less significant, while market risk and investment opportunities gained importance. This suggests that governance reform encourage firms to adopt more cautious and forward-looking dividend strategies. The comparison and contrast between the two articles. The first one is Articles 1 from Anwar etc. 2023 and Article 2 by Bakri etc. 2021. So the slides highlights the key similarities and differences between the two articles. So for the Article 1, it focused on firm-specific financial factors and emphasizes profitability and firm size as the main determinant of dividend policy. In contrast, Article 2 adopt a governance-based perspective by examining dividend behavior before and after MCCG 2012. While both studies agree on the importance of profitability and firm size, they differ in terms of focus and methodology, providing complementary insight into dividend policy in Malaysia. The implication. The findings from both studies have several important implications. For companies, dividend decisions should balance financial performance with good governance practices. But for the investor, understanding both profitability and governance quality is important when evaluating dividends paying firm. For policymakers, the findings highlight the importance of governance reform in shaping corporate financial behaviour. In conclusion, dividend policy in Malaysia is influenced by both financial and governance factors. While traditional financial determinants remain important, governance reform under MCCG 2012 have significantly changed how firms determine dividend payout. This reflects a broader shift toward more sustainable and long-term dividend strategies. The recommendations it based on the review studies. Future research could include macroeconomic factor and sector-specific analysis to better understand variations in dividend behaviour. In addition, examining board characteristic and ownership structure may provide deeper insight into governance-related influence. Finally, exploring dividend catering theory could further enhance understanding of dividend policy in Malaysia context.